Eric Youngstrom, Onramp. Good to have you.
Thank you.
I would say welcome to Texas, but
I live here.
you live here.
Yeah.
So, full disclosure, Eric and I've known each other for more than a decade.
Yeah.
And are we that old?
13, 14 years?
Or something like that. Going back to like the credit.com and the CS identity days and all that. And also, full disclosure, Eric's a client with Onramp Funds. Super excited to have you. So we've already covered the fact you're in Texas, but you didn't grow up in Texas?
No. I grew up in Washington State.
Washington State.
Yeah.
Okay.
Small town, Washington.
Small town.
Yep.
So you grew up small town, and then how in the world did you get involved in finance?
So my last company, we did order aggregation and shipping management for e-commerce SMBs. And one of the things we would see was these companies would have a good order from Amazon coming into the system, and they had no cash to buy the shipping label to ship the order, which then would mean they'd have to cancel the order, refund the money, which is, doubling your credit card fees for no revenue. Upset Amazon, upset customers, terrible thing to happen for a business. And so it looked like there was a really cool opportunity to go in and work with the same SMBs that we'd worked with at Shipping Easy across, 30,000 at Shipping Easy. And when we were acquired by Stamps, a couple 100,000 with an inventory product that would just solve the problem of making sure you always have inventory, that you can always advertise to turn the inventory over, and that you always have that last $5 to buy the shipping label to make sure that product gets moved from your dining room, your garage, your warehouse to wherever that customer is.
Mm-hmm. And so that led to Onramp, which is how many years? Or I guess they're right. Early stage e-commerce companies might be using personal funds.
Yeah.
To start, and they do that for a period of time.
Sometimes years.
Oh,
yeah.
Risky.
Yeah. I mean, Onramp's raised over $20 million, and Chase still makes me personally guarantee the credit cards for the company, which is really irritating.
That is irritating.
So these guys who are just not VC eligible, right? They're never going to raise the funds.
Yeah.
They don't have an equity pool available. And so we are kind of essentially a line, right? That gives them the ability to scale and keep up with.
You're their funding arm.
Yeah.
So tell us a little bit about the audience you serve, customers you serve them.
So our customers are U.S. based. They're small businesses, definitionally. Usually they're solopreneurs. Sometimes there's a couple of employees helping do some of the fulfillment work in the back-end warehouse. But they are the CEO, CMO, COO, CFO, all in one. And the product we've built basically automates how you draw working capital and how you would repay that to make sure that the line's always available when you need it, as if you had a full-time CFO in your business who was doing that manually with a bank line of credit.
Okay.
And our software just automates that process so that you have one less thing to think about, and you always know that your working capital is available for that next inventory purchase, or to, do that next Christmas campaign to make sure you're turning inventory over.
So they can see where they are as far as revenue and when they're going to need more funds to be able. So it flattens that curve out, I guess.
Exactly.
Okay. What types of loans? Like how big are loans? Are there average loan sizes or?
Our average loan right now for a new customer is about $25,000. And then our customers, what we found is in their first year, they grow 75 to 100%. And they do that again in their second year. So by the end of their second year, they're drawing about $75,000 per loan.
Okay.
So it's very exciting to see that, right? We actually can now see the impact that the cash we deliver is having on these businesses. Because without that, they may not be able to afford that next 50% bigger inventory purchase because their credit card would have been maxed out.
So they're sticking with you, it sounds like.
Yeah, we have customers now that have been there for over 2 years. And, net revenue retentions were running north of 125% year over year.
Awesome.
So it's working well.
Yeah. I don't need to say this to you, but maybe the folks that are listening, competitive space.
It's a competitive space because everybody and their mother will make a loan. But in terms of doing it purpose built for e-commerce, using our data streams, and really having the intimate knowledge of how the business works, there's really only 4 or 5 of us. It's in that regard, there's not a lot.
But there's not a lot. It's just competitive with those 4 or 5.
Yeah. I mean, but there are just a ton of people out there who say, give me your bank statements, and it might take me a week to make a loan.
Yeah.
And then here's a loan for you. Whereas, we don't ask for your bank statements. We're just saying, connect your store, connect your bank, and then we do the rest. And, an hour later, you've got an offer and cash is moving.
Yeah.
So just a much more streamlined, much easier process, right? And we're always there alongside you.
Yeah.
So just a different approach, right? It's not a traditional approach. It's very fast and very easy for the merchant.
And you mentioned, you said purpose driven, so, and for e-commerce companies, so very niche focus for OnRamp. What was the inspiration? And I think the stamps.com, I think, was some of that, and some of your history and experience of what wasn't working.
Well, so the real inspiration is growing up in a small town without a big business. My dad was a doctor. A lot of my friends, their dads were, here was the guy who owned the auto glass shop. Here's a guy who did residential construction. And those are the guys who had their store names on the Little League fields, right?
Yeah.
They were coaching Little League and teaching Sunday school and things like that. And so I wanted to be a small business owner. I liked small business owners. And I think that the more successful independent small business owners there are, the less concentration of economic power there is, that the healthier a society is and the healthier a world is. So from a purpose perspective, from my purpose, that's what I'm about.
Yeah.
And then the business itself is just purpose built specifically for e-commerce, because I think that's the biggest place that people are going to be building businesses for the next 20 years.
Yeah, that's a great inspiration. It's so true. I couldn't agree with you more. And I share that approach to this country. Small businesses are what make it all possible. You and I happen to run small businesses.
Right.
I wouldn't have it any other way, but that's great. So are there some success stories, or anything you can share, related to some of those relationships that you've helped establish with these e-commerce companies that?
Yeah, no, I mean, look, we've got, Feel Great Vitamin Co. Was one of our early customers. We've helped them grow and watched them grow and become very, very successful to the point where they've graduated from their need from an on-ramp because they're big enough to go to, established banks, right, and get a much more affordable cost of capital. But because, that takes scale to be able to get there.
Yeah.
Right? And so we were great to partner with them on the way. We've got another group called Storewolf that sells refurbished Dell computers that grew from a $10,000 advance to, doing hundreds of thousands of dollars at a pop now. And just, we get to watch that business grow month over month. It's phenomenal to see that kind of thing happen. And it's really rewarding to be a part of that journey, right?
Yeah, I bet.
To get there.
I bet.
Yeah. So it's funny when you think about running these businesses, you think about customer churn, and, in the SMB world, churn comes from, unfortunately, businesses failing.
Yeah.
Our churn also comes from businesses graduating, right? They actually just scale past us. And at least that's something you can be really proud of, because I might lose a customer, but I'm super excited that they've gotten to that scale where the odds of failure now have gotten so small that they're going to be around forever as long as they want to be.
Well, you've helped fulfill on the purpose that Onramp is. Yeah,
exactly.
That's great. What are some of the biggest challenges you're facing right now?
Growth. It's hard to, customer acquisition, getting that marketing engine really dialed in. So you've got a repeatable engine that can, on the performance-based side, right, they can just scale fast enough to keep your investors happy.
Yeah. Yes.
Right. That's the challenge, is the speed of investors. But I think we're getting better at that every day, and we're seeing the proof come in that as we're just watching the metrics come through. And then probably recruiting, right? I mean, just getting good people in is, I think we've been really blessed to do a really good job of it for the most part. But it takes a lot of time and energy. It's the right investment to make.
Sure.
Because a bad hire can be really detrimental to a business.
Finding good people. I mean, that's such a cliche, but it is so true.
It is. It's not easy to do.
Yeah. What do you see the next, when you think about what your industry is doing and the evolution of lending, kind of a down the road question, where do you see fintech going from here, and what you're doing for a living going from here? So it's evolved so much over the decades and years, and it's going so fast now. In some ways, lending is still archaic in the way it was done. You guys are farther ahead. Where do you see it in 5 years?
I mean, yes, lending's in the Old Testament.
It's
old.
True.
It's been around forever. Yeah. So we're not breaking new ground in that regard. I mean, I think the data streams will get better. If anything, that would be, I don't think it's going to change a lot compared to what it has been for the last couple of thousand years.
Yeah.
But I do think, the data visibility that comes with these things makes it a really interesting play, right? Like, we now underwrite e-commerce business owners that have retail stores, and we can underwrite the retail volume as well if they're using the same payment gateway that they use for their e-commerce business. And, historically, retail underwriting did not do that. Because the data stream wasn't there. Right? Just in the credit card process, you couldn't see the order. You just knew that there was a card swipe, right? And you really just get the aggregate daily volume. And so I think as those things get better, right, the opportunities become much more interesting to be much more granular about how you understand the risk of these businesses, but also the success potential, because the source of truth data means you actually have visibility in a way that that business owner does. And because you're not getting the data straight from the business owner, there's no manipulation you're concerned about. So the ability to make decisions faster and more intelligently, I think is really going to continue to
And
awesome.
You're not underwriting on credit then. You're underwriting on business performance.
Business performance. We actually don't do personal. And we're intentional about that. We want that we want the business to stand on its own 2 feet,
right?
As if it were IBM going out to get a line, and not Eric going out to get a line on behalf of Onramp.
Right?
Right. We think that's really important for these business owners, because it means that they're being treated as if they are the CEO of a bigger business, right? Where that business can go out and get its own facilities for finance or for anything else, right? And be treated as a business and not just a hobby of some individual.
Is there anything you wish more people knew about Onramp that they might not know?
I just wish more people knew about Onramp.
This is a good start.
Yeah, I mean, I'm super excited about what we do. I mean, I love working with our customers. I wish more of our customers understood that when they're having business problems, we're, as a lender, we're a little unique, that we understand that that's part of the risk we're accepting. When you work with small businesses, is that a lot of small businesses, unfortunately, are going to fail. And so we've put some structures around that are very owner friendly, so long as the owners are just being fair and with Onramp on the way down. But we try to then, kind of take a little bit of that headache away, because it's already a stressful time for them if it's working, right? I mean, it's a terrible position to find yourself in.
God, that's refreshing.
What
you just said is refreshing. I know your heart. So what you just said, I think, is what I wish more people knew that about Onramp, because they would choose Onramp over other choices because of what's at the heart of what you guys do. The fact that you're giving business owners a way down, a conversation I've had a handful of times today already with our other friends at the FinTech House, is when things are going well from a financial perspective for businesses or people, it's all good.
Right.
When things go bad, the institutions or the companies they work with, now you're being pursued, and not in a positive way.
Right.
And there doesn't seem to be much gray area in there. Either you're on point or you're off. Like either you're doing it right or you're not. And hardships happen. So hearing you say that's
we think hardships are going to happen, and we're trying to. I mean, the nice thing about our product and the e-commerce working capital cycle is 50 to 60 days. So we're not having to go give a year's worth of capital with a year's crystal ball in front of us, right?
Right.
Which I don't have. We need a 60-day crystal ball, which is a lot easier to kind of predict. And so we have a smaller exposure, and we're seeing these changes, and we're re-upping every 60 days. And so a $50K loan may turn into a $20,000 loan, but we also know that, we're seeing that downward trajectory, and we're trying to be helpful. But I guess because we have less exposure and we're working more frequently, right? We're a little bit more able to work with the merchant and really help them kind of through those times. Then help make sure that they're just not carrying that liability that might be a much bigger burden on their shoulders.
Sure. Yeah, you and I know as business owners, there's can be burdens at times when making payroll and everything else. Couple more questions. One is along the lines of trust in what we do for a living, meaning the financial system. It's trust in our financial system is so critical. And I don't think I can remember my lifetime in our society and in the systems of government and our financial systems has ever been lower. So we in this industry, how do you think about building trust so that we can restore faith in the financial system, like through the work that we do?
Wow. Not a question I was expecting. Not what I've thought a lot of. Trust in the financial system. I don't think people like the financial system. They won't like bankers. I don't know that from my perspective that I don't trust them. I just trust them to do what the rules say. Barring maybe the 2008, 2009 great bailout, that kind of stuff, which I don't care for. I don't know the better answer to that one either, but I don't care for it. I don't. That's a hard one.
It's one of these things when I ask the question, and there's no easy answer. didn't expect you to have one necessarily, other than just the conversation. I'd like us in our community here in finance, and we've got 100 people downstairs. The folks listening to us and watching us can't hear it, but there's a lot of great people downstairs from all different walks of life and different sides of the fintech and financial industry, that from the conversations I've had and these folks that we know are all connected to the fact they want to try to do better for our society and the businesses and consumers that use the financial system to make their day-to-day lives better. So from that standpoint, I think we're all thinking about it. I think a lot of us are thinking about it, but the trust in the financial system, like trust in our society, is a big question.
I do actually have an idea on this. It's actually not specifically financial, it's antitrust. But that is, our system of government is designed to diffuse power from federal to state to county to city to municipal. And we have an antitrust system that's designed to prevent monopoly. But I think the antitrust system should be redesigned to look at just market size. Or some similar metric that would then say there's a maximum market size where you're not allowed to exist, and we're going to split you in two and create two entities that then are going to compete and will double the number of CEOs and double the number of other roles and create more opportunities for people to grow up in businesses. But simultaneously, then be able to say, but if you want to be greater than, I don't know what the size is, 10%, 20% market share, that you actually have an obligation then to apply the full Constitution of the United States against your business. So as Twitter gets so big and they want to say, no, we can censor because we're a private company. Well, no, because you now have more than 10% market share. And so or whatever that number is, right? You're not allowed to. And I think the same thing would be interesting for banks, that, Chase Bank may say, look, it's worth it to us to be a global bank, and simultaneously have to adhere to the Bill of Rights. And we can't then have our payment gateways deciding we like this business or don't like that kind of business, don't want to be involved in Second Amendment debates or whatnot.
Yeah.
Or great, if you want to be able to pick and choose your winners, that you just can't be that big, or we're going to go cut you down to size, which then diffuses that concentration of economic power, creates more choice and more competition. And I would think at that point, that actually ends up building more trust, because you're going to have then these business leaders closer to the populations that we're working with, because there will be more up.
Yeah, I like that. That was interesting. That was an answer I didn't expect. So,
well, I didn't connect it at first, because I spent a lot of time in my college days in antitrust. So that's always percolating in the back of my mind. And I think corporate power is actually one of the problems, and that's why you have the kind of crony capitalism stuff going on in DC, right? Is that the size of these businesses using the federal government to try to maintain power. I don't think there's easy answers, right? Because before you had that, you had the robber barons buying up state legislatures, right? Doing the same thing at the state level. Yeah. So, but there's got to be an answer that recognizes where we are today.
Yeah, it will. My hope is it will come. It will get better. I'm optimistic about that. All right, one last question. This one's a lot easier.
All right.
So you've done a lot. You've run a lot of companies. Now you're founder of this newer company, Onramp. What advice might you give someone that might be thinking about entering the fintech space or starting a company in the space?
Wow. So I started a fintech company, never having been in finance, and just assumed that I could figure it out along the way. But having had a lot of exposure, in running companies, right, you get a CFO's perspective, if you will. And I just think you have to want to go do it. I would say to most people, if you have an idea that you want to pursue, you should go pursue it. And if you don't, but you think you might one day, you should try to go work for other people who do. I think I've been really blessed that I got lucky in the companies that I joined as a, kind of first employee being hired to get to work alongside some great people. And I viewed that journey as an apprenticeship to get to a point where I could go found something where that experience would pay off and give me an opportunity to de-risk when it was my turn.
Yeah. Well, thank you for that. Yeah. Eric, it's been a blast.
Thank you.
Now we go downstairs and have some fun.
All right.
Thank you, Eric. Eric Youngstrom, Onramp Funds. Find him at onrampfunds.com.
Was that your last one?
That's it.
All right. Perfect.
Yeah. Thank you, Eric.
It was awesome.
Thank you for listening to this episode. If you've enjoyed what you've heard, don't forget to hit subscribe. And if you'd like to learn more about Customer and the work we're doing building financial and fintech brands and businesses, please visit our website, customer.com. That's CSTMR.com. or you can find us interacting with clients and sharing insights on LinkedIn. All of these links will be in the show notes.